Hey, this is Matt from InvestiQuant. Today is Tuesday, September 29th, 2020. The markets opened fairly flat this morning, down just a little bit, and after the open, we pushed up near the prior closing price and then rolled over, and we have kind of drifted lower. The price action has been down quite a bit since filling the gap, but the range is not really all that impressive. We're working with about 32 points of range as of the time of this recording, which is lighter than what we have been averaging. But we've seen a fairly quiet day that has mostly traded lower, and that is happening in the backdrop of coming into the turn of the month. So what I want to do this afternoon is look at what has happened historically as we approach month end with the type of price action that we're seeing so far today. So let's go into Discover and set this up. We're going to look at all four instruments. The setup is going to be a time-based entry that'll get long at 3 p.m. Eastern Time. It'll exit at the close, which is 4:15 p.m. Eastern Time. For the opening filter, since we opened pretty flat today, I'm simply going to say that we opened within the prior day range, and I'm not going to do up or down gap because I want to keep as many samples as possible since we're using a seasonality day that only happens once a month. Then I'm going to go into the post-open filters, and I'm going to say that the market is trading below the opening print as of 3 p.m. Eastern Time. Now, we are not at 3 p.m. Eastern Time as I record this, so I don't know if we will be trading below the open, but currently we are trading below the open. So I'm going to go ahead and go with that. Next, I'm going to go into the indicator section. I am going to say that we are above a 200-day moving average. I'm also going to say we're above a 10-day moving average. Add that over there. And then lastly, I'm going to go to the calendar section. And I'm going to say it is the day before the last day of the month. I can add this from the active today section, just clicking on that, and then hit view results. And here we go. So these are the results of going long at 3 p.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time on the day before the last trading day of the month. This is taking place when you open within the prior day range, and at 3 p.m. you are trading below the opening print. So you are forming a red candlestick at that time on the daily time frame. This is also above a 10 and 200-day moving average, so in a bullish environment. And historically, we've got 25 samples in the S&P, 25 in the NASDAQ, 23 in the Dow, and 35 in the Russell. And looking at win rates on these, the S&P just 48%, so pretty neutral there. The NASDAQ's a little bit weaker at 44%. The Dow is the weakest at 35%. And the Russell, very similar to the S&P, at about 49%. So win rates as a group, just slightly weak. They're not all that bad, though. A couple of these are pretty neutral. So not seeing a real bent in the win rates for being weak. But what is noticeable, as you can see on the equity curves, they are all pointing lower, which is likely due to the fact that the losses are bigger on average. So average loss here for the S&P, a little bit more than twice the size than the average win. For the NASDAQ, they're pretty even. For the Dow, larger losses than average wins. And on the Russell, those are pretty even. So let's take a look at the results distribution for the S&P. So these are the results distributions of the trades within this back test. And you can see on the vertical axis, we've got the trade count. And then on the horizontal axis, we've got the P&L in dollars based upon trading one contract of the ES. The farther you go to the left, the bigger the loss. The farther to the right, the bigger the gain. We've got 0 right here in the center. And the blue highlighted section is one standard deviation from the average trade. The average trade is marked right here in the middle. So looking at this, you can see the most common scenario for the winning trades, which are these green bars, is a very small winner. Whereas on the downside, the most common trade is a small loser, but you also see kind of a handful of others that are just kind of spread out here, fairly even in size. Whereas on the positive side, they drop off very quickly and they don't go out as far. So you're seeing very small winners here that don't happen all that frequent. Whereas on the downside, you kind of have larger bars taking place farther away from the 0 line. So that is giving you the larger average losses there. So hopefully you found that helpful. Good luck, and we will see you next time.